So Keurig Dr Pepper officially beat consensus for Q2 2026. Adjusted EPS came in at 57 cents, which cleanly beat the 54-cent estimate, and revenue hit 7.31 billion, which is a massive 75.6% year-over-year jump, topping the 7.23 billion consensus.
Right, and they even reaffirmed their full-year guidance on top of that. Management is still projecting between 25.9 and 26.4 billion in total sales, along with, low double-digit adjusted EPS growth.
But the stock reaction was just a total roller coaster today. I mean, it initially surged 7.5% pre-market, but then reversed entirely to close down 1.24% at 30.37 as the market actually digested those details.
Yeah, though it is worth noting that heavy institutional buying did drive the stock back up over 10% to around 32.51 in the weeks following the report.
True, but we need to connect that crazy intraday stock reversal directly to what caused it, because hidden under that headline beat is a massive divergence between their non-GAAP and their official GAAP accounting numbers.
Exactly. I mean, on paper, it was a total margin collapse. Their GAAP EPS plummeted from 40 cents a year ago to just 4 cents. And their operating margins, they dropped from 21.6% down to just 8.6%.
Okay, hold on. Let me push back on this whole beat narrative for a second.
Mm.
Because dropping to 4 cents a share while growing revenue by 75%, that is like swallowing a whale. I mean, this is entirely about the JDE Peet's acquisition, right?
Spot on. They closed that $17.9 billion acquisition on April 1st. So that brings in $2.8 billion in quarterly revenue, but it also saddles KDP with extremely heavy integration charges and, well, big inventory step-ups.
Right, because when you integrate a global asset of that size, it just wrecks your profitability on paper. And they took on a ton of debt for this, too. Their long-term debt spiked to $21.58 billion.
It did. So that top-line revenue explosion is really just the sheer math of the merger. If we pivot from the global coffee acquisition and look at the underlying performance of their legacy segments, it really shows a tale of two very different companies.
Oh, for sure. The real engine right now is U.S. refreshment beverages. That segment is absolutely thriving. Sales grew 10%, which was driven by a really healthy 6.5% increase in volume and mix.
And they had 5.9% higher pricing on top of that. So they have serious pricing power there. People are actually willing to pay more, and they are buying more volume.
But then you have the anchor dragging them down, which is legacy U.S. coffee. That side is seriously struggling. Revenue fell 3.2% there.
Yeah, and operating income dropped nearly 25%. That is some brutal margin compression. And it is largely driven by soaring green coffee input costs. I mean, Arabica coffee is up 30% since just June.
Wait, really?
Huh.
A 30% spike in just a few months? That is insane. Plus, they are dealing with the impact of recent tariffs, too.
Right. So when your raw materials spike that aggressively, even if you raise prices on the consumer side, you just can't completely shield your bottom line from that kind of perfect storm.
Which completely explains management's ultimate endgame with all this. This huge segment divergence is exactly why they're planning that early 2027 split to break into two independent companies, beverages and global coffee.
Yeah, but to get there smoothly, they have some serious risks to navigate. CEO Tim Cofer is targeting $400 million in cost synergies just to offset all those integration costs we talked about earlier.
And their primary risk definitely has to be that balance sheet. I mean, management is hyper-focused on using their $714 million in Q2 free cash flow to deleverage fast.
Exactly. They want to get that debt down to a 4.1 times ratio by the end of the year. They have to get the house in order before they divide it.
So leaving you with a final thought to ponder as we wrap up this deep dive. With the 2027 split looming and Arabica prices remaining so highly volatile, is KDP's current valuation pricing in a successful fundamental turnaround? Or just the sheer math of the JDE Peet's integration?
That is definitely the big question for retail investors right now.
It really is. Well, make sure to follow the show for daily earnings coverage just like this.